If you have received a letter from HMRC, the first thing I want to say is this: do not panic. A letter from HMRC does not automatically mean you are in trouble, you owe money, or you are being investigated. But it does mean you need to take it seriously, read it carefully, and respond correctly. In this video, I am going to walk you through exactly what to do, step by step, from the moment that letter arrives in your hands all the way through to resolving it. By the end of this video, you will know how to check if a letter from HMRC is genuine, what the different types of HMRC letters mean, what your rights are, how and when to respond, what happens if you ignore it, and when you need professional help. This is general information and not personal tax advice. Always check Gov. UK or speak to a qualified UK accountant or tax advisor for your specific situation. Before you do anything else, your very first step is to confirm that the letter you have received is actually from HMRC and not a scam. Scam letters pretending to be from HMRC do exist, and they can look very convincing. HMRC has an official page on Gov. UK, where you can check a list of recent genuine letters they have sent out. You can also check whether any QR code printed on the letter is genuine, using the same Gov. UK guidance. If you are unsure, do not call any number printed on a letter you are suspicious about. Instead, go directly to Gov. UK and find the official HMRC contact number from there. Once you have confirmed the letter is genuine, your next step is to read it carefully from start to finish. Do not skim it. You need to identify 4 things from the letter. First, what is HMRC asking for or telling you? Second, which tax year or years are being referred to? Third, what the deadline is for your response. Fourth, who the named officer is dealing with your case and their contact details. Write these 4 things down before you do anything else. These details will guide every step you take from here. Not all HMRC letters are the same. Understanding which type of letter you have received changes everything about how you should respond. The first type is a nudge letter. This is the most common and the least serious. A nudge letter is not a formal investigation. It is HMRC prompting you to check your tax affairs are correct and up to date. It may say something like, they have information suggesting you may have income that has not been declared. It is not a legal demand, but you should not ignore it either. The second type is a compliance check letter. This is more formal. HMRC is checking a specific part of your tax return or your wider financial affairs. It may relate to one specific area, which is called an aspect inquiry, or it may cover your entire tax return, which is called a full inquiry. The third type is a tax demand or calculation letter. This is HMRC telling you that you owe a specific amount of tax and asking you to pay it or to contact them if you disagree. The fourth type is a making tax digital letter. With MTD for income tax launching from April 2026, HMRC has been sending letters to over 200,000 people, informing them they need to sign up and comply with the new digital reporting requirements. The fifth type is a general information or update letter. These are routine and usually do not require action unless they ask for a specific response. Whatever type of letter you have received, ignoring it is never the right option. This is one of the most common mistakes people make. HMRC will escalate. If you do not respond to a nudge letter, it can turn into a formal compliance check. If you do not respond to a compliance check, it can turn into a full tax investigation. If you do not respond to a payment demand, additional penalties and interest will be added. HMRC operates within clear timeframes, and they expect responses within the deadlines stated in their letters. Some letters give you 30 days to respond. Others may give you a shorter window. Whatever the deadline is, note it immediately and work backwards from it. Before you respond to any HMRC letter, you need to gather your financial records for the tax year or years being referred to. This means bank statements, income records, expense receipts, previous tax returns, payslips, invoices, and anything else that is relevant to what HMRC is asking about. Do not rely on memory. Go through your actual documents. You need accurate numbers, not estimates. If you are missing records, start reconstructing them as best you can from bank statements, email confirmations, and platform records. If HMRC has raised a question about a specific income source, for example online selling, rental income, or freelance work, focus your records gathering on that area first. At this point, you need to make an honest decision about whether you can handle this yourself or whether you need a professional. If the letter is a simple nudge letter and your tax affairs are straightforward and clean, you may be able to handle it yourself by reviewing your records and confirming everything is in order. But if the letter refers to a compliance check, a formal inquiry, a large amount of money, multiple tax years, or if you know there are errors or undeclared income in your past returns, get professional help. Contact a qualified UK accountant or tax advisor before you respond. This is not about being worried. It is about protecting yourself. A professional can review the letter, advise you on the best response, and represent you in communications with HMRC if needed. If you receive a letter from HMRC and you know that you have income, you have not declared whether from a side hustle, rental income, online selling, a second job, or anything else, the most important thing you can do is come forward voluntarily before HMRC formally opens an investigation. HMRC has a voluntary disclosure process. If you approach HMRC and disclose undeclared income before they formally contact you with an investigation, this is called an unprompted disclosure, and it can significantly reduce the penalties you face. If HMRC contacts you first, and then you disclose, this is called a prompted disclosure, and the penalties are higher. The key principle is this: the sooner you come forward, the better your position. Voluntary disclosure shows HMRC you are acting in good faith, and they treat that more favorably. When you are ready to respond to HMRC, respond in writing. Even if the letter gives you a phone number, follow up any phone calls with written confirmation so there is a clear record. In your written response, be clear and factual. Answer exactly what HMRC has asked. Do not volunteer additional information that was not requested. Do not guess or estimate figures, only include what you can confirm from records. If you need more time to gather information, you can contact the officer named on the letter and request an extension. HMRC will usually agree to a reasonable extension request as long as you ask in advance of the deadline. Keep copies of everything you send to HMRC and note the dates you sent them. If HMRC has sent you a letter saying you owe tax, and you do not pay or engage with them, the consequences escalate in a very structured way. First, additional penalties and interest are added to the original amount. Then HMRC can issue enforcement action, including collecting the debt directly from your employer through your tax code, recovering money from your bank account, instructing debt collection officers, or, in serious cases, taking legal action. The key message is this: if you cannot pay the full amount HMRC says you owe, do not just ignore it. Contact HMRC and discuss a payment arrangement. HMRC does have a time-to-pay facility which allows you to pay what you owe in installments. This is far better than ignoring the letter and letting penalties build up. When dealing with HMRC, you have rights, and it is important to know them. You have the right to be treated fairly and professionally. You have the right to a clear explanation of why HMRC is contacting you. You have the right to appeal HMRC decisions you disagree with. You have the right to seek independent advice at any point. You have the right to ask HMRC to review a decision before it goes to a tribunal. If you feel HMRC has treated you unfairly, made an error, or is taking action that is not justified, you can raise a formal complaint directly with HMRC. If you are still not satisfied after that, you can escalate to the adjudicator's office, which is an independent body that reviews complaints about HMRC. If the letter you received is specifically about making tax digital for income tax, here is what it means. From 6 April 2026, sole traders and landlords with income above the relevant HMRC threshold must keep digital records and submit quarterly updates to HMRC using MTD-compatible software instead of one annual tax return. HMRC has been sending letters to people who are in scope for MTD to let them know they need to sign up and get compliant software in place. If you have received one of these letters, you need to check Gov. UK to confirm whether you need to sign up now, find compatible software, and understand the new quarterly submission process. Ignoring an MTD letter puts you at risk of penalty points under the new MTD penalty system, where missed quarterly submissions earn you points that lead to financial penalties. So, to bring it all together, if HMRC sends you a letter, here is your step-by-step process. Check it is genuine. Read it carefully. Identify what type of letter it is. Never ignore it. Gather your records. Decide if you need professional help. Come forward voluntarily if you have undeclared income. Respond in writing clearly and on time. Know your rights. And if you cannot pay, speak to HMRC about a payment arrangement rather than saying nothing. HMRC letters do not have to be frightening. Most of them are routine, but they all require action and the right response at the right time. If this video helped you, please like and subscribe to HustleWise UK for more straightforward UK tax and money guides every week.